Okay, so something pretty extraordinary and frankly completely unexpected has just happened in the UK housing market. And it's a move that has caught pretty much every expert and analyst completely flat-footed. While all the predictions were pointing towards a continued slump, a real winter of discontent for house prices, the numbers that just landed, well, they tell a totally different story. It's a story of a sudden and really dramatic comeback. So, what's the big headline number? Get this. New buyer inquiries jumped by a staggering 74% in February. And nope, that is not a typo. We're talking about nearly 3/4 more people getting serious about buying a property. This isn't just some modest seasonal uptick. This is a fundamental shift in the market. All right, so let's dig into this February surprise. This isn't just about one statistic, it's about a massive change in how people are feeling about the market. And it happened almost overnight, flying in the face of all those gloomy predictions. Now, to really put this into perspective, the last time we saw this kind of buyer buzz was way back in early 2021. But that was a frenzy totally fueled by a massive government tax break, the stamp duty holiday. But this surge in 2024, it's happening all on its own. There are no major government freebies. This seems to be pure organic demand. So this begs the big question, right? With interest rates still pretty high and the cost of living crisis still biting, why on earth are buyers flooding back into the market right now? Well, we've dug in and found 3 key clues that really help explain this unexpected comeback. So the crucial question is, what flipped the switch? What actually changed in the psychology of the British homebuyer that made them say, okay, February, now's the time? Okay, clue number 1 is a subtle but really powerful shift in mortgage rates. Now, the Bank of England's base rate hasn't moved, but we've seen this fierce competition erupt among lenders. And that meant a lot of fixed-rate deals got cheaper. For buyers who were just waiting on the sidelines, seeing some of those rates dip below that 4% mark, that was a huge psychological tipping point. It wasn't just about the rate itself, but the direction it was going. It was a signal that, hey, maybe the worst is finally behind us. The second clue comes from the rental market. For months, it seemed like the smart move was to just wait for this big house price crash that, let's be honest, never really happened. Instead, prices kind of stabilized while rents just kept on climbing. Suddenly, the cost of waiting around started to look a lot higher than the cost of just getting on with it and buying. And this visualizes the exact calculation so many people are making. On one side, you've got this unpredictable rising rent where you're building zero equity for yourself. On the other, you have a fixed mortgage payment that actually builds your ownership stake over time. For a lot of folks, that fixed mortgage is starting to look like the safer, more predictable financial bet for the long term. Our final clue is a classic supply crunch. It's the simple story of supply and demand. The number of homes actually for sale is still way below average. Why? Well, a lot of current owners are basically locked in by those amazing ultra-low mortgage rates they got years ago, and they really don't want to give them up. So the fear of missing out has changed. It's not just about prices rising. It's about finding a suitable home at all. So we know the why. Now let's get into the who. Because the group that is really at the forefront of this surge is the one everyone just assumed had been priced out of the market entirely. Yep, it's first-time buyers. The conventional wisdom was that this group was completely sidelined, crushed by high interest rates and the struggle to get a deposit. But the reality on the ground is proving to be a lot more complex than that. And just look at this. First-time buyers aren't just participating. They are the single largest slice of the buyer pie right now. They are the engine room of this recovery. So the big question is, how in the world are they managing it? Well, it seems to come down to 3 key things. First, family support. The bank of mom and dad is working overtime with record levels of help being treated almost like an early inheritance. Second, government schemes are providing this quiet but crucial backstop, especially the mortgage guarantee scheme, which gives lenders the confidence to offer mortgages to people with smaller deposits. And third, plain old-fashioned saving. Many have been cutting back like never before to build up that all-important deposit.
Now, this surge isn't happening everywhere equally, which brings us to the where. A whole new map of the UK property market is being drawn as we speak, with some clear winners and losers emerging.
And the contrast is pretty stark, right? You've got the Northwest seeing this mini boom with really strong demands driven by affordability and the buzz around cities like Manchester and Liverpool. Meanwhile, London and the Southeast, which saw the biggest price drops, are having a much more sluggish, lukewarm recovery. It's a major geographic rebalancing of demand. And the big driving force behind this new map is pretty clear. The shift to remote and hybrid work is no longer just some temporary trend. It is a permanent structural change that has basically untethered thousands of workers from needing to live within a painful commute of the most expensive city centers. So this all leads us to the ultimate question, doesn't it? Is this surge the beginning of a real sustainable recovery, or is it just a temporary false dawn? Right now, experts are divided, and there are two really compelling competing theories for what comes next. The optimists believe the fundamentals are falling into place. Mortgage rates are getting better, employment is stable, and real wages are finally growing again. They see this as a totally rational response to better conditions. But the skeptics, they argue this is just a short, sharp burst of pent-up demand. And once those eager buyers have found a place, they say activity will slump right back down because the bigger economic challenges haven't just disappeared. So how will we know who's right? Well, there are a few key things to watch for. First, the spring market. If this energy keeps up through the busiest season, that's a very strong sign. Second, any interest rate cuts from the Bank of England mid-year could add even more fuel to the fire. And finally, we'll be watching the hard data, the mortgage approval numbers later in the year, to see if all these inquiries are actually turning into sales. Ultimately, what February's data did was make the UK property market way more interesting and unpredictable than anyone thought possible. Something fundamental has clearly shifted. And the question it leaves us with is this: was that the starting gun for a true recovery, or was it just a brief, beautiful flourish before the real storm hits?